Hello and welcome to Fundu Money. Here we're going to discuss four important things that you need to keep in mind when you're buying ELSS, that's Equity Linked Savings Scheme, which combines tax saving with high growth, long-term high growth. And we're going to be discussing the four things, which are these four things that you need to keep in mind. Number one, you need to remember that you're taking high risk. It's a high risk mutual fund. Then you need to remember that we're going to be there's going to be a 3-year lock-in. You need to keep that in mind. Number three is you need to stay away from the lure of dividends. There's a lot of people who for some reason they move into ELSS for dividends. And the third is avoiding too many ELSS. That spoils the show. These are the four things we're going to be talking in details. Why you need to spend time keeping these things in mind. That's simply because unless you keep these in mind, these are the common mistakes, you'll end up making the common mistakes and not get the best benefits or the most benefits of investing in ELSS. So we'll be discussing these briefly one by one, but that'll happen in just a little while. Welcome back. Welcome to Fundu Money. We are discussing the four most important things that you need to keep in mind when you are buying ELSS, that's Equity Linked Savings Scheme, which combines tax savings under Section 80C. You can get 1.5 lakhs per annum and you get long-term high growth, but that happens over a period of 8 to 10 years in an equity fund, and ELSS, as we know, is an equity fund. So let's get started. Let's take up the points which we briefly discussed and we touched upon. And the first part is that you need to keep in mind that this is a high risk investment. It's a tax saving investment and it's a high risk investment. Now, the reason why this is important is most of the other investments that you're making in tax savings are low risk investments. Look at PPF, whether it's NSC, they are not sort of linked to the equity markets, which is kind of volatile in the short term. So in a sense, it becomes a very different creature. So you need to recognize the fact. Why is it important? Because when it's linked to the equity markets, it will go through ups and downs, and in the short term, in the long term, what happens is it's almost like time becomes like a voltage stabilizer. It stabilizes the returns, and so you get the high returns. Now remember that when we are talking about long term, if you're investing at different points of time, each one of these investments has to do its time. Okay, so if you're talking about you're investing today, then it must do that period of whatever 8 to 10 years in an equity fund. If it's going to happen 1 month later, again, the reason why we are mentioning this is that a lot of people invest through a systematic investment plan. It's not when you started, it's when you make the investment. From that point, for that investment, the clock starts ticking. Now, why this is also important is that we have seen that there are a lot of people who get taken in by these comparisons. There's lots of discussions happening, ELSS versus PPF, ELSS versus that, NSC. Why? These are not apple to apple comparisons, right? You don't compare. You can compare one category of apple with another category of apple. You cannot compare apple with an orange. So when you're actually comparing ELSS with a PPF, it's an unfair comparison. Basically, because there are two different risk classes, and you cannot be comparing that. If you want lower risk, and as a consequence, the returns would be comparatively lower, but you are more or less sure about those returns, then you should not be looking at ELSS. But if you're looking at ELSS, then be prepared that along with the equity markets, things will go up and down. You should not get nervous. A lot of people, what happens is they invest in ELSS and they start getting nervous, and that's where the problem happens. And that brings us to the second point, which is a 3-year lock-in. You must know that each investment, ELSS investment you're making, will have a 3-year lock-in. So when you're investing, before you invest, really have a good look at the fund that you're investing in, the scheme that you're investing in. Look at its 1 year, 3 year, 5 year performance. Does it enjoy the confidence of investors? How do people feel? Have they had a good experience? Don't just quickly invest towards the end of the year, which a lot of people do, and they start suffering. Well, if the markets go down, and that's how the first and second points are linked, if the markets go down, you're not supposed to get nervous, because you know that fluctuations will happen in the short term. The waiting game is the game. The rewards become sweeter and greater if you stay investment. So you need to remember that. The other part is, a lot of people get into ELSS for dividends, and that's not a great idea, because when you are the reason why you are investing in ELSS, you want to have tax saving and you want to get that long-term growth. If the money comes to you, how is the money growing? That it defeats the purpose. You want growth, you want more savings. That's why you are taking the risk. That's why you have done all the homework. That's why you're enduring through the fluctuations. Why take that money back? If you need that money very quickly, then you should not be getting into something like an equity fund, which an ELSS is. You need to go somewhere else and get the money somewhere else. But in any case, remember, in tax saving investments, most of these investments have a lock-in. ELSS, of course, has the minimum sort of a restriction of 3 years. So you need to keep that in mind when you're buying ELSS. Don't buy it for dividends, buy it for growth. In the long term, if you earmark it, fix that ELSS investment for a long-term goal like retirement or children's higher education. That's when it starts making sense, because then it can combine with other investments and make sure that you save a decent amount, right? So the last point, the fourth point, is avoid too many ELSS. There's so much of agonizing that goes on. This is the best ELSS, that is the best ELSS. Every year there'll be a new one. That's not hard to, that's not difficult to fathom or understand, because each fund manager managing ELSS will have a certain take. Every stock, every portfolio will not do well every year. So these things will go up and down. But remember, 90% of the return, so if you're getting 10% return over a long period of time, or 12% of return, 90% of that, so in case of 10%, 9% of it will be determined by the fact that you have invested in equities. So the fact that you're in the right asset class in the long term, studies have found is attributable to your return. So don't agonize so much over which is the best, which is not, and if it's gone down, things have gone down, you've invested in ELSS and it's suddenly not doing as well as the hottest new ELSS. Don't be worried, because over a period of time things get sorted out. Now these are some of the common things that people get hassled about, and they start making mistakes. They'll do something in a hurry. These are the 4 things, if you keep in mind. Remember, this is what will help you get the most out of ELSS. So let's do a quick recap. Number 1 is, you need to keep in mind that it's a higher risk investment. It's a tax saving investment, but it's unlike other tax saving investment, remember. So you need to keep that in mind. Number 2 is that there is a 3-year lock-in, and you need to take it in the right spirit. You need to understand that it's a high risk and 3-year lock-in. In fact, the 3-year lock-in is actually helping you, because you need to stay invested in an equity fund for a long term, right? That's number 2. Number 3 is, don't buy an ELSS for dividends. It's a bad idea. You need to, more of that money needs to stay away, needs to stay invested. It doesn't need to come to you. If you need the money so desperately, then you have to make other arrangements. This is not the route to do it. And lastly, avoid too many ELSS, otherwise you'll have a cupboard full of trophies of best ELSS, and you will not get the results that you want. You'll start getting nervous and panicky. That's not what the idea is. So we hope you found this useful. If you liked it, hit the like button, share it with others, wait for our next presentation. Till the next time, take very good care of yourself, and goodbye.